Like, were you always comfortable with that?
I don't even really I wouldn't say so many paper cuts.
Okay.
I'm not wrong, try again, wrong, try again, wrong, try again. That's not how I trade. I typically start into a position a lot smaller than you might think, and then scale in if I'm correct.
Welcome back, everyone, to Be the Trader. Today I have a very special episode, very unique. We're here at Moody Beach in Maine. No idea I'd ever be here, which is really cool. And I have Nate from Investors Underground, Nate Michaud, who's been on the show quite a few times in the past. And so if you're confused on who Nate is, then you need to go back and watch those episodes. We'll have links below in the description. And today I just really wanted to chat with you, Nate, and talk about some things that have recently came up from just some of the, you be posting on your trades on Twitter sometimes.
Yep.
And one thing that I've noticed, by the way, thanks for being here.
Thanks for having me.
Yeah,
thanks for inviting me here.
Yeah, we're at your place. So it's amazing to me that, I'll watch some of your trades, right?
Yep.
And I've noticed that over time, you're really comfortable at just switching on and off of like, placing trades here, wrong, no big deal. Place a trade here, right, and just constantly shifting and going to different markets or different sectors or different stocks.
Yep.
Have you always been that way to be able to just be like, I'll try this one doesn't work, or it does, I'll add more size. This one doesn't work, scratch, and just move on. Like, have you been that way from the beginning, or is that something you acquired over time?
Multitasking like crazy is typical of me. However, I have since, over maybe the last year and a half, I really have zoned in focusing on two names to scale into, two names to size into, two main watches. So my goal every single day by 8:50 a.m. Is to only have those two names that I'm going to focus on off the open. Now I will trade more. There's secondary watches. There's other names that I might be interested in trading. However, it's not where I'm going to have my primary focus, my primary size. And so that's really allowed me to get a lot better trades out of the ones that I'm prepared for, rather than being scatterbrained and trading, 6, 8, 10 different names. Now, I do like to trade other names because that's where a lot of good trades come from. You start to get a feel for things. For me personally, I need to get into the trade. And once I get into that trade, you start to kind of feel how its characteristics, or sort of how it reacts. Yeah, the personality. And then you can make a decision from there. You get to see how it reacts. For me, if I'm not in it, it's off radar, and maybe I've not even had it on the screen. I don't really know what it's been doing. However, if it's in my portfolio in the position section, I've been watching it, and I have an idea of how it reacts. So if and when I start to see things changing, I might start to position in a little bit more. If it doesn't do what I expect, then it's off. I take it off. But the biggest thing, despite trading a lot, is typically two names per day of size.
So it would be safe to assume that maybe one or two names or trades really make your day.
Correct.
Right? Okay, so that means you're also taking maybe some paper cuts here and there.
Yep.
Like, were you just used to being comfortable right off the bat of your trading career to just be like, paper cuts is part of the game. I'm just going to take a lot of paper cuts because I'm going to focus in. When I'm right, I'm going to be good. Like, were you always comfortable with that?
I don't even really I wouldn't say so many paper cuts.
Okay.
I'm not wrong, try again, wrong, try again, wrong, try again. That's not how I trade. I typically start into a position a lot smaller than you might think, and then scale in if I'm correct. And so usually on my wrong trades versus my right trades, the difference between that loss and versus the gain is huge. And the reason for that is because usually when I'm wrong, I'm not scaling into that trade, so it's a very minimal sized trade. When I'm right, I'm scaling into it, and therefore, you're positioning in as you're getting more and more and more right. And then as that trade comes, and as whether it flushes out or it breaks out, whatever you were anticipating, as that happens, usually I try to scale back to a normal size. So I try to risk when I'm the most right, and which is opposite what a lot of people do, right?
Yeah,
a lot of people are typically adding into a loser, adding before confirmation. They're afraid to ruin their average, but really you should be using your most risk when you're most right.
And that is
Otherwise
so hard
you-
to do because you don't want to reduce like you're thinking about your average. You don't want to
Right.
take a loss. You don't want to make a good trade into a losing trade. How do you combat that when you're sizing into your winner?
You're a day trader, so what does your average mean, right? You want to protect your average as best you can. So one thing I think we've said multiple times on the interviews is kind of pretend that you're not in the trade yet, right? Would that be a good entry? Probably not. So why are you just hammering in? Just because you have the padding, just because you were right and you're on the right side of the trade, that doesn't mean it's time to get in there. Wait. And would I be entering here? No. Would I be entering here? Yes. Okay, I don't have a position yet. I'd be entering. That's a good time to scale. You keep on, if you're shorting and you keep on missing entries, it's kind of like a heads up that you're on the right side of the trade, right? Same thing if you're long, you keep on missing entries to add, keep on missing entries to add. What happens? Typically, you never have enough size when you're right, and you always have too much when you're wrong, right?
Yes.
So that should kind of give you that oh yeah, I'm on the right side of the trade, because every time I'm trying to add, somebody's one step ahead of me. They're one step ahead. So that gives me a little bit more conviction to maybe scale a little bit more aggressively when that sort of stuff happens.
You said I would be surprised about how significant the difference is between sizing in when you're right and when you're just get a feel.
Yep.
To put in perspective, without even going to numbers, because numbers doesn't really matter to everyone trades different, right? But just for argument's sake or just discussion, let's just say someone's regular size or losing comfortably is $1,000.
Yep.
Like if I'm 10 cents risk to make it simple, then that means I'm going to take 1,000 shares, right?
Right.
At that point. So give us perspective if that's that trader's mentality. When he's just sizing in slowly, not trying to put all in yet because he's not comfortable. What kind of size would you say to really get that drastic change? Because people may assume that when you say, I'm just sizing it a little bit here, they may assume like a quarter, a half, like they may assume that. So what would you...
Feelers are typically 10 to 20% of where you expect to be.
Gotcha.
And it's not every day that I even get to full size. You have an idea of where you think full size, but you might actually be, if the trade's right, you might actually be double what you thought was going to be your full size. But it's an idea of, this is where I think I'm going to end up on this trade. And therefore, if you think your risk is a dime or 30 cents, then you should ideally be looking for maybe $1, $1.50 of downside. There's a lot of times that, people are risking 10 cents, but it's like, well, what's your edge? 10 cents to the downside, 10 cents to the upside, it's 50-50. So what I tell people is always, 3 to 1, 4 to 1. Make sure that the trade that you're going for, the reward is, just by looking at it, better than what the potential risk is. And if it's even, then why are you even in the trade? You're supposed to be putting edge on your side, higher probability, things like that. But for somebody like you, or in that case, like an example of that you gave, 1,000 shares, if your goal is to be 1,000 shares, maybe you're in 200, 300 shares. And then it breaks down, then it confirms, and you're scaling in more on the short side. Same thing if it was on a breakout. What I think a lot of people do is they put all their, they're afraid to miss that breakdown or the breakout, and they're anticipating it. And we're in a market where they know that. They're one step ahead. And a lot of times you might be right by the end of the day, but not right there. They're going to trap you, go the other way before they go the way, which you're eventually right, yes, but you don't have the stock anymore. You're not in there. They get you out. So it's very important to position in my opinion. And it's a way of being able to exhibit a lot more risk without doing that on that first entry. You can start in with maybe 500 or 1,000 shares. If your end goal is to get to 10 or 20,000 shares, your entry might be 1,000 shares on your first entry. Then 2,000, 5,000, it's starting to come. The crack looks very close. Maybe there's some type of big transition, a big volume bar, whatever the case may be, that makes you go from 5 to 10 to 20,000 shares. But you started with 500 or 1,000. And as you've got a little padding, it's coming. That flush happens or that breakout happens, and you're getting back to your 10 or 5. And you were able to use the fact that you were right, edges on your side, scale into that winner, size back down, let the trade work.
Now, I'm very curious, though, on being able to, like, whenever you at your stage now, like you'll be taking these trades and you go through some nice runs, right? Do you ever, whenever you go through like a losing maybe streak or losing session, like maybe just for a couple of trades, like how does that make you feel now as a trader currently? Like, is it just no big deal to you at all? Or is there ever a moment where you get a little chip, like a little weakness in your mentality? And if you do, how do you handle that?
It's not the losses that are bothersome anymore. It's the not respecting a stop loss. Basically doing the wrong thing in the trade is where I get more frustrated than at a loss itself. You know, losses happen. Losses happen every single day. It's about minimizing them, and really that is the key to trading. Like, so many people talk about so many different things, but it's literally keeping as much money as you can in your account. Give yourself the best chance. But losses are going to happen. It's about minimizing them, and for me to focus on those and dwell on those, that's not going to do anything for the next trade. And we've talked about the next mentality, right? And it's just how much faster can you get back to equilibrium? How much faster are you going to come and be mad and get frustrated and take it out on the market? Then you're going to dig the hole even deeper. So it's really about getting upset with breaking your rules, poor risk management, and that's where all of my frustrations come from. Not related to a loss. Losses happen. I've had major losses. I've had a lot of mini losses. Mm-hmm. But if you can take away, what you did wrong, what you could do better, and all of that, then at the end it's kind of a win, right? Because then you're going to prevent it for the next time.
What is the most, like when you said frustrating losses, whenever you break a rule or you trade it improperly, you said, is there a common thing that you've done in the past where that became a frustration, like it was a rule you kept breaking or anything like that that was maybe, like for me, for example, one of mine was, for the longest time, was cutting when I was on the right side of the trade. Mm-hmm. Like, was there something like that you were just breaking a rule that was getting you through like a circle of frustration?
I think that there's probably 20 times in that trade before the loss that you knew that you should be out, right? So that's like, I know I probably shouldn't be here. Mm-hmm. Okay, now we're entering into like, this could go either way. All right, maybe I have too much size. Maybe I should be sizing down, but I'm already sized up. Am I going to really size back up to this amount again if I size down? And you start going through all these kind of questions about, what are you going to do with the actual trade? And then as you're debating reasons why you should not get out, it rips the other way. And then, that's where the loss comes. So I always kind of like, what are those factors? What are those, the first poke? Like, hey, I think you're a little too big here. And now I listen to that. Mm. And if I miss it, I miss it. Like, it's okay. And I think that's one of the biggest mistakes people make is they're afraid to miss. Obviously FOMO, but you literally are in the trade and you're afraid to miss the trade, so you don't want to get out of it. Even though it's like at a point where it's like, this is getting a little sketchy, and my risk is here, but a lot of these have been going into circuit halts, or if this does go, it's going to rip way past my risk. But yet, why do you hold it? Why are you still there? So it's that kind of stuff that you need to pinpoint and kind of focus on, and make sure that you move on or get out of that trade before it takes you.
How are you differentiating, you pinpointing that and accepting that I need to listen to this voice versus you hear it, but you're still in your plan and your stop hasn't been hit or your profit target, but you feel this emotional trigger? Like, how do you differentiate, like, I need to listen to this or I need to stick to my plan? Like, you know what I'm saying? Because like you might listen to this and then it works, yeah, and then you're like, I shouldn't have listened to it. And then when you don't listen to it and you stick to the plan, it rips against. It's like, look, how do you differentiate
more often
that?
than not, you should do what it's all about risk, right? And I'd rather be upset that I missed the trade than be upset that I'm in the trade, right? And there's just been so many times that you can pinpoint those, and whatever, you miss opportunities. But building back from a sizable loss, it's wasted, opportunity cost. When you're trading in the zone, how fast things can compound. And when you're not confident, when you're like, I just had a loss, I don't really want to do it, maybe I'll wait. When it's that mentality, it's just a slow and steady, kind of grind. Whereas when you're performing, it's really an exponential, like it starts to add up a lot faster. So I always want to stay in that zone. And if that means that I stopped out and I would have been right, whatever. It's better than I should have stopped out and now I'm in a big hole. And there's been plenty of those with Kodak. I've obviously talked a lot about AMC, Clove. I mean, those are ones that are just ridiculous intraday swings, waste of mental capital, waste of opportunity costs, all these different things that I knew at least 20, 30, 40, 50 different times that, maybe I shouldn't be, positioned in that size. Then you have these things that you've never seen before. And that's what it comes down to is we're in a market where we're seeing things that have never happened before. I've never seen circuit to circuit to circuit. I've never seen Clove, for example, going from 8 to 10 to 12 to 15, and then all of a sudden gamma squeezed to like 24 or something like that. But it happened, and so that's what you have to understand when you're in that moment. What if that happens? What if? So you always have to respect risk.
And it's nuts that you just said, like, everything you just said, like these are things that have never happened before, but yet they happen. And you've been trading for like, what, 20 years? Something around there? So it's
15,
like, this never happened before, and it's happened.
Yeah.
So it just shows you that, like, you never know, like, you could always blow up. Like, there's always a circumstance that could happen. And it's like, you're just expressing yourself, explaining that you always got to be aware that the worst case scenario can always happen. So like, protect yourself, make sure you're aware of that and not just blind, like deer in the headlights, just walk in and be like, I'm always going to be right or whatever it may be. So I'm glad you said that. But you mentioned something earlier about having FOMO or, anticipating the move.
Yeah.
Or anticipating the move. A lot of traders have problems with patience when it comes to a move or waiting for their trigger or waiting for whatever it may happen.
Correct.
How do you not anticipate something versus like getting in too soon? Like, how do you make yourself be patient for a move to happen before you get into the move? If that makes sense.
Yeah, I mean, the same ways that like kind of, I've never seen this happen before. All these things, you're on the wrong side of these trades sometimes, and am I going to do that again? And I think it's just years of being on the wrong side of trades and doing a lot of great trading and then having one take away a good portion of that. Doing a lot of great trading, having one trade take a lot away. And I think about fine tuning and figuring out what you continually do wrong. And for me, I love trading. Obviously the big momentum trade of the day. However, it's very easy to get on the wrong side of the trade. So for me, I want to wait for basically the key levels. And so you might start into a position, for me on a short side, for example. Something's been going up, 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 and it flushes out. If it does not stay heavy, if it does not continually sell off from that point forward, I'm not fighting that trade. And before I'll wait and I'll see what it does, and then maybe I'll scale in. Well, that see what it does starts you on the wrong side already, and you're gonna double up and double up and double up, then you get blown out. So it's just years of doing the wrong thing that you formulate what works and what doesn't. And look, if you want to get on the front side and fight it, then by all means. It's stressful. It might work sometimes, but overall it's not a good way to trade. And a lot of times you pre-exhaust yourself. So you actually miss the trade itself by not being patient. So patience has been like my biggest thing in this year, especially a lot last year too. But I think last year was more of one of those outlier type years where everybody it was bananas. This year is more, there's a lot of great opportunity, but if you don't have patience, you're probably not having an outlier year. You're probably not outperforming. You're probably not at peak performance because you're letting this FOMO, this fear of missing this big pullback, take you out of the game or take all your profits away before you have the chance to making them. And what you don't realize is the higher that these things go, the longer that they run, the more they're going to pull back. So why are you trying to find the top? The higher they go, the more range you're going to have once they turn.
Yep.
And once they turn, everybody's already exhausted out, and now it's your turn. So the key is really not forgetting what people, got exhausted out on the day before, and then trading those ones the following day.
You said a couple of things on there, and one thing that really stood out to me is exhausting yourself, trying to force something like anticipate the move. You might exhaust yourself before the move comes. And I know that's happened to me a ton when I first started trading. And it still happens to me sometimes now. And I know it happens to a lot of traders. And you also mentioned something way earlier about I'd rather be out of a trade and be upset than in a trade and be upset, right?
Yeah.
It's like combining those two just shows you like all of these answers are coming from mistakes that you've made, right? Because you said something earlier too. You said like just years of just making these mistakes have helped me conditions where I'm okay with listening to that inner voice of like just taking it off now because I want to protect myself and I want to make sure that I'm here for the long run. And that's just all evolving into just the whole idea of like you're just so focused on risk, which is really important. A lot of people know, like we hear that like risk management, and that's super key.
No matter what level you're at, 1,000, 1,000,000, 10 million, 100 million, every trader that I know that's even higher, risk.
That's what you hear.
How did
constantly.
you get here?
Yeah, risk management, and because if you don't have risk management, you're gonna blow up, and
Right.
you're just not gonna be here for the long run because you'll make money or you'll just lose it in one trade.
Correct.
But let's talk about the traders who are making money and they're doing well, they're doing consistent. And let's say put yourself in that situation because you're in that quite often. You've been consistent for a long time. So when you are consistent, are there moments in your trading career where you're just like, I can feel myself feeling like I'm not going to be wrong. And then you can tell now because you have a lot more experience that, hey, it's coming, I may need to take a break, or maybe you do something that triggers something for you to say, I need to take a break. Is there ever moments like that now?
It's not really that I'm not going to be wrong or like any overconfidence, but it's more you're crushing it day after day after day, and then you come up on a day that maybe has mediocre setups, but yet you're still as aggressive as you were yesterday. And that's what personally I have to watch out for a lot of times is, there's these perfect setups day after day, and you're able to really scale in, scale out. And as you size up, liquidity becomes more and more of an issue, right? So if you show up one day and it's like, it's not really too much going on, but I'm going to go for it anyway, then you're oversized, there's no liquidity there, and you end up, going backwards. So for me, I always like to try, it's always my goal, to, firing on all cylinders, staying at that peak performance sort of level. But it takes one of those days to take you off that. And so it's never an overconfidence, I'm not going to be wrong, because I'm wrong every day. It's about allowing yourself to be wrong that's going to keep you here. But so I would really associate it with just being aware and don't get loose when your setup's not ready for you yet. Because you don't need to trade, you don't need to push the trade, you don't need to force the trade. And I feel like in the past, I did a lot of that. Forcing a trade that wasn't there, and whether or not it worked out, who knows, but what happens is maybe it does work out and you get rewarded for that reckless decision. You get rewarded for another reckless decision. And at some point, it catches up.
It sure does. And you also said, I love that you just said this. You said that there are moments where you are taking, not so much getting overconfident, but more so of forcing trades because you want to stay at that peak performance level. So how are you making sure like that peak performance mindset isn't becoming a negative factor in your trading? Does that make sense? Like of forcing a lot of things happening? Because with that mindset of, and maybe I'm wrong here, but that mindset of like I want to be like the best, or I want to have that peak performance today every day. How do you prevent that from actually becoming a negative pusher? Like for traders who are just coming up, they might be having that mindset, like, but they're only 2 years in, a year in.
Peak performance can also be knowing when not to trade, right? And so that's kind of like the thing you gotta. For me right now, if I wake up and it's not, this is the one. These are the top 2 that I'm focused on. There are mornings like that, and each morning when I grab the microphone, which we do at 8:50 a.m. every single morning,
Yep.
which I think is beneficial, even if you don't have a room, even if you don't have people listening to you. Verbalize it, because it's going to allow you to hear it, and like when you're in the trade or when you're thinking about it, you're going to be like, I just said this and I'm trying to do that. That doesn't make sense. So I really think verbalizing it and getting back to what you were asking, it just peak performance is knowing when not to trade and when to trade. And it's really what it comes down to. And patience is probably the biggest thing that I've pushed this year. I wake up and I'm ready for these 2 stocks, or you know what, today is going to be a hands-off day. And I've said that more often than not in the past couple weeks, and it ends up being a phenomenal day. But it wouldn't have been if I had tried to force something off the open, because then you put your blinders on, and it's 4 p.m. You just wasted your whole day trying to figure out this one trade that wasn't even an A+ setup, but you traded it anyway because there was nothing else. So sometimes taking that trade takes your mind or your focus away from all the other opportunities that are setting up throughout the day that you would have seen had you not been an idiot.
And that was money what you just said, because you literally just said peak performance. I love that you pointed that out, because I was over here putting it in one box, but you said, no, peak performance can also mean taking a break and knowing that, hey, there's no trade right now, so wait for the right trade.
The hardest part is knowing that there's going to be another trade. And we can say that in this market because it literally is every single day. You go back a year or 2, well, maybe like 2 or 3 years, and like there are those great setups, but it was like that 1 per month, 2 per month, maybe max. And now they're setting up every single day, obviously. So we can say it. You can't be afraid to miss it. You can't be afraid to just, it is what it is. And, life goes by, and you're going to look back and say, what, I probably should have avoided. Probably should have done that. I probably shouldn't have forced that. And, that's kind of where I'm at now, where I'm just like, what, if it's there, it's there. If it's not, whatever.
How'd you build the character, though, of being so nonchalant about taking losses? Especially, now it's easier. I don't want to say easier, but I want to say now where you're at now, it may be different. But back in the day when you were coming up, how were you able to, was there something that clicked for you that eventually, maybe 3 years in, 4 years in, the first year, where it's just like, this is just part of trading and it's completely okay? Or is it always part of trading where you're kind of not comfortable with it, but you're just pushed forward anyway?
It's always been, for me, it's always been difficult.
Okay.
It really has. I'm completely stubborn. A completely stubborn trader. It is what it is. And that's something that I have to battle with every single day for years. But I think I have a really good hold of it the last 3 to 5 years probably, and just a ridiculous hold of it this year. Just with maybe like 1 or 2 decent drawdowns over a day or 2, but nothing that wasn't all set in 2 or 3 days later. But it's just it's part of the game, and it is what it is. And I never have any. It's more of a, this is where I'm right, this is where I'm wrong. This is where the trade continues to prove me right. This is where the trade is no longer doing what I expected. So if it's not doing what you expected, then you're wrong. So why are you still in the trade? And it's as simple as that. So move on or size down. Sometimes you don't always have to get all the way out of a trade. If you still have this idea, this bigger picture, maybe it's something you're thinking that within 3 or 5 days it's going to be here. Maybe you're just oversized intraday. So sometimes I'm just sizing down on things, readjusting, I call it. Readjust around the core trade that you have. Always recheck in with risk. Always make sure that you're not too top heavy on a particular name, and that's it.
When you said stubborn, that was your biggest weakness. Can you be specific on what it was specifically for you that as a stubborn, like when you were stubborn, like was it stubborn with what? Like exactly.
It's not real. Like I never had a problem taking a loss, but it was just some type of, I knew I would be right, but just not on my timetable, or he might be right. It's gonna go here, but that doesn't mean it's gonna do this first. And so I think that's where a lot of people have big issues, especially now in some of these trades, and they get run over like crazy. But you got to admit that you're being stubborn and you're on the front side of the move. You're not moving on. And for me, it was just more identifying it and like, yeah, I am being stubborn. I do need to just respect my risk, respect my plan.
But there's one thing to identify it, right? But how are you, I'm trying to get a little deeper here. How are you like when you're in the moment and you're there in it? How did you learn I'm being stubborn? Here's what I'm doing. Like, how did that start to happen for you?
That's when, your P&L goes the wrong way in a big way. You're in a Kodak squeeze or all these other things. I mean, it's a slap in the face. And
right, but now you're seeing it before that.
But that's the 20 things, like those knocks, those pokes. It's like, hey, this is a test. Are you stubborn or not? Hey, and maybe there's still a couple of those that happened for me. But instead of waiting for 20 of them to happen and it's too late, maybe on the first or second kind of warning shot, I'm moved on or I'm sized down. And, you can always get right back into a trade. That's the thing is, think about, commissions are free for a lot of people now, but for the people that are active traders, that are active trader brokers, you're still paying commissions. A lot of people are afraid to pay that commission. Let's call it $5, $10, $20, whatever it may be. But they're more than willing to lose $2,000, $5,000, $10,000. You could get right back in for a couple bucks. Yep. Like just move on and wait for the trade to prove you right.
When people hear that word, just get out, you can get back in. Mm-hmm. Some people may associate that with, like when they hear it and they're like, I get it, Nate. Like I can just get out and get back in. But what if when they're live at their desk, they're like, I'll just get out. They'll get out and they're like, oh no, it's working. I get back. Like 1 second after they get back in. Is that what you mean when you say that?
That can be the case sometimes.
Okay.
Sometimes just seeing what happened. I'd rather somebody else figure it out for me. And I've used this term recently, like let them be the guinea pigs, right? Let everybody else try to figure out the top. And I think that's really crucial, especially in this market. Same thing with an unwind. There's been a lot of just stocks completely getting demolished to the downside too. And it's no different than trying to find the top on a short, trying to find the bottom on a long. And so let everybody else be the guinea pigs and try to figure that out. And once the dust settles, then you start to kind of step in there.
Before we start to wrap this up, because you mentioned let everyone else find the top, there's a lot of times where if people are probably wondering, like, well, what does that look like? Mm-hmm. Like, would you say sometimes there's those situations where you can tell, or not tell, because you never know, but there's like a key area on the chart, mm-hmm. right? And it's testing. Then it finally breaks through with like big volume candle, yep. right? But also rejects very hard. Like that's an indication like, hey, pay attention to me. Like
Correct.
This is where all people thought we're going to go. They thought this was like, we're going to rock it, but we're not. Yep. So we may be near the bottom. Is that a situation where you're kind of like, I'm going to go at this right away? Or is it more like, let me take a stab at it and then let me wait, as you mentioned later, for confirmation? Is that kind of what you're going through?
Depends on the setup, but a lot of times if that happens, I will start in. It won't be of a crazy size. And then if it continues to stay heavy from there, I will scale in. But exactly what you just said, and I call that kind of like the goalie pull, right? Where it's coming up, everybody's trying to find the top. And then it squeezes out, and it does this little stuff move. And everything's changed recently, in the last 6 months, 12 months. That used to be it, blowout and then done.
Yes.
Well, not anymore. And so what happens after the stuff move is the most important. It just happened today on a particular name where stuffed, flush down. Everybody's like, yep, that's it. I'm about to bank. Nope. Whoop, right back up. And, everybody's screwed. Everybody's on the wrong side. So I've been very patient with let that happen, then let it prove. And when it stuffs, slams down, that's your level. Let it do its bouncing around. Let it get away from this new base. And that's where I usually start to come in. Because a lot of times it just goes right to that same level that you're used to seeing. And like, this is it, that's it. And then it does that one more where it pulls, breaks out, slams right back down. And you're not there because you just got popped.
And I know a lot of traders face through that. And it's just like the market, if you're wondering what we're talking about in this specific time, because it could change later in the future, but the market's always evolving, as we said. But today is September 10th, 2021,
yep.
Which is nuts. But
the stock was ISEE.
So go look that up, ISEE, yep. IC. And we'll put the link in below so that way you can go at least know the ticker name. But before we wrap this up, where can people like learn more about you, Nate, or if they have any questions? Because I'm sure people are gonna be like, well, wait a minute, I want to have questions on this. Is there any way they can find you on?
Twitter, Investors Live, or investorsunderground.com.
Perfect. Well, look, hey, appreciate all y'all being here. If you're enjoying this content, make sure you hit that like and subscribe and share it with other traders. And again, my man Nate, appreciate you, man. Thanks, brother.